Should we expect a crash or correction following the presidential election?
Depends on who's in office. Hopefully, if Trump wins, he is as presidential as he was the first time when he won, to give the market some kind of calm and relief. So, will there be a pullback? Yes, there's a pullback every month. I don't think we'll have a big correction as a result, because I think once whoever wins is in, will be very clear in what the policies are, and then you'll know which companies should do well based on those affiliations and initiatives that they want to push. Pullback, yes, but I think there's a lot of fear going into it. But if you look through any presidential cycle, of course, this summer may be a little bit rocky, but by the time we get, I think, to September, October, I think a winner will be priced in. There'll be a strong Christmas rally, and then we have some issues that we have to face going into next year. But I think we'll be fine. I think we worry too much about smaller issues that are not the biggest reasons why the market will drop or fluctuate. I would keep my eyes more so on interest rates, if there's a cut or if they raise, quantitative easing, and then also if other countries actually go through a recession and announce it. Those have more of a weighting than the presidential election itself. For a trader, you're going to get a lot more volatility, but for the long term, I don't see a big pullback as a result.
Yeah.
Plus, the powers that be, I think, are telling them, like, you need to signal some confidence to the market.
Yeah, I think that's the key. When you think of like presidential elections, even midterms, we spoke about this. Uncertainty leads to volatility.
Absolutely.
And so if there's no certainty, if we don't know where we're headed, then you might see some volatility. I don't know if a correction will be in the calling cards, but based on even like the stock market's almanac, if they study the history of presidential cycles, and it's always it references the best 6 months to trade. And so if we're traders, if we're investors, I always look at those best 6 months, especially when we're talking about post-election, or we're talking like pre-election or midterms. And historically, it's been from the month of November to April.
Yeah.
So obviously November 4th, the election will happen. Traditionally, in an election year, it's been a hold, right? People will hold wherever the positions they're in to see where we're going to settle, because obviously there might be uncertainty, or there could be certainty and say, all right, well, the incumbent will be run back. And then, like you said, we prepare for the next year. And so we've seen the summer months slow down. And so the worst 6 months post-election has been obviously from May to October. And so historically, that has shown that since 1949. And so we got to keep that into mind. But again, I think it's priced in by, I would say, September.
Fall.
Historically, over the past 5 years, and that's why I said micro money is just such a great barometer of that. We've seen the past 3 Septembers and what that has meant when we're talking about sell-offs, when we're talking about people trying to finish out their fiscal year. We've seen pullbacks across the board, whether it's the Dow, whether it's the S&P, whether it's the NASDAQ. We've seen October, some pullbacks. And if we look at the history of pullbacks, look at when these crashes have happened, look at when these corrections have happened in those months. So I think it gets priced in. And then after, I think we'll settle. And then I'll be looking to figure out, all right, certainty, uncertainty will determine the volatility, and to determine if and when we should invest.
Yeah, look at pullbacks as a time to get into the market more than anything. Like, just change the way you see it. And quality companies only. A lot of people run into trouble when you're trying to trade it or buy companies that are not quality. And I know people are like, how long can you talk about Apple, Microsoft, Nvidia, Tesla, Lilly? I'm like, if there are more quality stocks, like there's some like KLA that are quality, AutoZone, but there isn't. I remember maybe 12 years ago, you probably had 60 or 70 great companies that you can get returns from. It's not like that anymore. Give up on sector rotation. Just focus on the ones that are great. Indexes first and ETFs, then add 2 to that. You'll be fine. But I think a lot of these issues with losses come from trying to time it on a trade basis, where if you hold it for a long period of time, everything is going to be okay. If I made you money, please put yes in chat. Investing is not that damn. It's not rocket science to show.
Yeah, something.
You know what's hard? Like faking a moon landing. That's tough. This easy.
Yeah. So some things from a political standpoint could affect, right? When we're talking about taxes, when we're talking about
Yes.
capital gain taxes.
44% would.
That's just, I mean, that's crazy. And then obviously when we're talking about tariffs, I think it was 2 weeks ago, we started talking about the tariffs that are presumed to be put on China if President Biden remains in office. That could affect companies, right? When we're talking about especially that region of the world and some of the companies that are building there with the hopes of finding a global landscape to expand their businesses, that plays a part. That plays a part. So that could affect the bottom line for a lot of companies.
Yeah. Okay. So what about this company Archer?
Yeah, I don't know what happened. Maybe something in the meme stock area happened, but a lot of people asked me about this. Archer Aviation. I don't see what the hype is. The high was $17 in 2020. It's currently at $3.30. If you want to gamble, go ahead. But like, if Boeing's in trouble, Archer Aviation, which Boeing you can argue is a infrastructure and government investment as well, if they're not doing as well, I don't know why. What happened in the meme stock land to make people want this one, but no, I'm not a big fan of this one.
Yeah, I looked it up a little bit. So they're responsible for, I guess, the flying helicopter, like the electric helicopter that flies on its own. So they partner with ETFs, which is, and we know if you watch the Premier League or if you watch anything in soccer, huge, right? Huge brand. When we talk about Emirates and we talk about ETFs, those are the two biggest airlines and companies. But
nope.
Electric flying taxis. There's too many other quality things to be invested in outside of that. Just looking at this chart, this would be something as an example. If we looked at it like as something that you shouldn't invest in, stay away. Like if we're looking at it from a 6 month, we're looking at it from a year, 2 year. Not really attractive. No. So I'm not big on this one.